Senator Nienow joins me now to talk about his impressions of the MNsure rates that were recently released. Thanks for joining us. We appreciate your time.
Well, glad to be here anytime.
So, Senator, let's begin with that question. If you were to grade the rates, give them a grade A to F, based off of what you heard last Friday here in Minnesota, what grade would you give them?
Well, you know, it's a complicated question. It seems so simple, but it's not, because compared to some of the other metropolitan areas, and the rates that were released were just metropolitan areas. I asked them for statewide numbers, and I'm hoping to get those soon. But relative to other states, they were pretty low. But the problem is, relative to what you can buy today on the open market, they're pretty high. So do you want to grade them relative to what everyone else is doing? And that's pretty good. Or do you want to grade them relative to what you could get today? That's pretty bad. So it depends on the context in which you give that rate. For example, a 25-year-old, the best rate they can get is about 40–50% higher in the exchange than you can get for a comparable product in the market today. You know, how do you want to measure that? It's either an A or an F. I don't know what you want to give it.
But is that the truth for across the board? And I know, for example, some people pay, teachers in particular here in the metro area, for some districts, they pay really high family plans, $1,400 a month for a family plan. For somebody like that, do you think the exchange might be a viable option?
Well,
or
maybe.
Is it apples and oranges, as some
it's
people
really
claim?
going to be. It's really going to be contingent on the individual circumstance. The rates overall, on average, are going to be more expensive. That, I think, everyone would acknowledge is a fact compared to what you can get today on the open market. But those rates are very often, if you qualify, are going to be bought down with taxpayer subsidies. Now, we're all paying for that, but for you, getting the subsidy might be a good deal. And so it really depends on the individual circumstance.
Okay, let's move on to your reaction when you hear that companies like IBM in particular, they plan to move retirees off of the company.
100,000 people, yes.
Exactly. So do you think the exchange is kind of, should taxpayers, in your opinion, be concerned that they might be picking up the tab for something that was employer-based, that's something the employer paid for in the past?
Oh, that's absolutely going to happen. Employers, businesses, this is what they do. They do spreadsheets, they look at the bottom line, and they say, how much is this going to cost or save? And when it comes to employees, just because it saves money, they might not do it because they want to do right by their employees and keep them. But depending on the cost-benefit analysis, they might shift and shift that cost. And businesses are absolutely doing that. You saw that with IBM. You saw that with, I forget, there's an airline that shifted thousands and thousands of employees. They said, you know what, it's going to cost us lots of money. We're going to stop doing this. It's going to happen all across the industry, not all the industries, across the market. And businesses are going to look at what is the best deal for us and what is the best deal for our employees and balance those. And you're seeing a lot of those companies are shifting off, or they're giving a one-time payment saying, here's some money. Go into the exchange and go buy your insurance and get a taxpayer subsidy. And you and I are going to pay for that when that happens.
So let me ask you this, based off of these last couple of questions, just do you think that having this exchange provides more competition in this marketplace? And therefore, isn't that a better deal for consumers to have more options? It typically is the Republican mantra of opening up the market.
If the question is, does the exchange create more competition? No, it's out there right now today. Actually, you can go to Esurance, you know, and go plug in, and who's going to offer me this, that, and the other thing. In Minnesota, one of the challenges we have that limits competition is the fact that we do not allow for-profit companies to offer insurance, health insurance, in the state of Minnesota. You know, and one of the largest insurance companies in the country, one of the fastest growing insurance companies in the country, is based in Minnesota, but they can't sell here because they are not nonprofit. And for the consumer, it's not about whether you make money or not. It's about whether I get the best value and the best price. If you can make $1 on that, good for me, good for you. But in Minnesota, we don't allow that.
So let's go back to the rate question a little bit. Do you think forcing young people, young, healthy people, to join the exchange, do you think that that might help reduce the rates in the long term?
Well, yes. The premise of Obamacare, the Affordable Care Act, is that everybody will be required, forced to purchase insurance, or if they don't, to pay a tax, a penalty, depending on what you want to call it. The Supreme Court called it a tax, which makes it constitutional. But the problem is particularly in the early years. So in the first year, the maximum penalty someone will pay is about $100, well, or 1% of your income, maybe a couple $100. But for a young person not making a lot of money, $100 is your penalty, compared to $2,000, $3,000, $4,000 a year in insurance premium. Well, if you're a 26-year-old who knows I'm probably not really going to get sick. I mean, how many of us really got seriously sick when we were 26-year-old? Not many of us. So if they opt out, we're not getting those premiums, and the young people will be subsidizing the old people who get sick or have babies or whatever. They've got families, they've got kids, they get vaccinations, they get checkups. They use the healthcare system. The young people don't. And if they opt out, you could run into what a number of studies have called a death spiral. If the young people are not getting into the system and paying those premiums, but not using the healthcare system, then the premiums are going to go up, and you have more people opting out, the premiums will go up, and more people opt out. And that's the potential death spiral that has been identified, and that's potentially the Achilles heel of the Obamacare system.
And that's projecting into the future, so I want to ask you a different perspective on it. Steve Parente, who's a healthcare economist and professor at the U of M's Carlson School of Business, he believes actually that the MNsure has a healthy level of competition. And he was quoted saying that the real test is 3 years out. That's when you'll see if this thing is really bulletproof with high levels of competition and good rates. So if you were to project 3 years out, what do you think has to happen for it to be something that you would buy into?
Well, for me to buy into it, we would have an actual market competition, free market system. Now, we started out with not much of that to begin with, and now that we've got Obamacare and the exchange, even less of that. But I would agree with them. It's going to take a few years, and we're going to find out, is this thing going to pass or fail? It's either going to work or the whole thing's going to implode, and that will take a couple, 3 years. I talked about earlier in response to your question about a potential death spiral. That could take a couple of years if that occurs. And what it's going to take for this to succeed is for those younger people to not opt out and to pay those premiums but not get the health care because they don't use it. When you're 21, 22, 26, you don't use health care. You're young, you're healthy, but we need you to pay the premiums to essentially subsidize the 60-year-old, the people that are getting mammograms and colonoscopies and immunization for the young kids and all of that kind of stuff that comes along with getting older.
Senator, you're pretty black or white about whether it's going to pass or fail. Do you think that there's some wiggle room? Are there modifications that could be made so that maybe this is the start of something that could work? Or do you just think it's an idea that just isn't going to?
I think the potential was there before this federal law was passed and signed into law. I think the potential was there to find some middle ground, and you and I talked about this off the air, where there are things that people agree, the pre-existing conditions. We could account for that. We could figure that out. We could build that into the underlying cost and reduce those pinch points. But the way the system is set up right now, I liken it to a fork in the road. We're either going to go completely down this way and government is going to take over healthcare, or the whole thing is going to collapse and we're going to go back to a free market. Which way does that end up? I'm not sure yet.
Okay. With those words, Senator Nienow, thank you again for joining us. We always appreciate having you on the set.
Anytime. Thank you.